How many people are, I think the tie is about 80 people, maybe at this point. I paid myself $0 for 3 years.
Why you're better than anyone else.
We have market data, derivatives data, sentiment data, blockchain data, news, research, private company, NFT, governance, data, all in a single unified interface. If I knew that answer, I'd be incredibly rich. I care a lot about a number of social issues. Like personally, I'm vegan. I'm not the kind of vegan that's annoying about it. I don't think I've ever said that on a podcast before.
Well, there's a backstory, right?
So there's a backstory. It's a funny backstory. It's funny to say the name is stupid.
Hello and welcome, and we're here at Holistic Investments, and I'm your host, Konstantin Kogan, and we're delighted to have an amazing guest today, Joshua Frank, who's a co-founder and CEO at thetie. Hi, Joshua.
Hey, thanks for having me on. By the way, amazing might be a stretch, but I'll try my best.
Okay. So traditionally, we should throw a legal disclaimer in the beginning that this content is for informational purposes only, and you should not construe any information or material as legal, tax, investment, financial, or any other advice. So now let's go right into it, Joshua. So I was trying to research your history. How did you start crypto and like what actually, incentivized you beyond the fact that I know you as a friend more like, and there's not a lot of information outside there, right? So let's start with the basics. Like, how did you start Web3 journey? What did you do before? And tell us a little bit more about yourself.
Yeah, there's not much out there because it's not that exciting, but I will try my best to make this exciting for everyone. I mean, the TLDR is, I graduated college, started working in post-trade settlement technology, was super bored at my job. And this was a time when, 2016, 2017, when, you had ICOs booming, you had people like John McAfee and others tweeting the names of individual, assets. They would go up 300 or 400% on the back of a tweet. And I was like, this makes no sense. This industry is completely nonsensical. Somebody I was looking for data and information to understand what was going on and to try to figure out how to make investment decisions. And it just didn't exist. And so quit my job in late 2017 to kind of, go out and start thetie, and with the original mission of really building a platform to and obviously a lot has changed over the last 8 years, but build a platform rather to make sense of the nonsense, which was the crypto industry back then. It's still very nonsensical, but it was even more nonsensical 8 years ago.
Well, that's there's a lot of challenges in that industry for sure, right? But what I think it would be kind of interesting to delve deeper into, like, okay, well, you had many choices where to go, like, build maybe a retail platform, build an exchange, or build any other startup.
We actually started as a retail platform. So happy to actually talk about that journey.
Yeah, let's talk about your journey. So right now you're operating like an incredible, like, business, profitable, like I would say more data centric, right? Like it's one of thetie is a leading provider for informational services. So you have this comprehensive institutional grade, like, terminal that provides hundreds of different data points for bigger institutions, hedge funds, market makers, VCs. So how did you get into this particular business vertical?
So originally, when I started the company, it was just me, and I was 22, so 8 years ago, and basically started as a sentiment data platform. And so the idea was originally, hey, let's make a platform that focuses on sentiment data because, especially back in 2017, remember I mentioned, all the people tweeting and prices of assets flying. Sentiment was really how we started. And, I got started with sentiment, but then, I love data and we just kept adding more and more data and insights. And originally we started as a free to use platform for retail where anyone could go on, didn't have any idea on how we were going to monetize it, but just was like, we launched this thing. There are a few people that still remember it. We had a free kind of retail platform that people could go on and use, but realized very quickly that we were kind of in a weird place where we were kind of in between being a free retail platform, but having so much data that institutions were interested, but maybe not enough for institutions. And so in about 2019 or 2020, probably closer to early 2020, we decided to basically shut down the free retail, website and launched the first version of what became the TIE terminal, which was really an all-in-one platform to aggregate everything going on in crypto. So, the thing I realized, when we existed with our social data is that data in crypto was everywhere, right? And you went to one platform for, very early versions of on-chain data. You went to another platform for news. You went to another platform for sentiment. It didn't make sense that I needed to have 17 tabs open in my browser. And so we really focused on, starting to build an experience to aggregate that all together. And so the second product after sentiment that we really built out was news, aggregating news from about 7,000 sources in real time, and then kind of just continued to build and expand from there. But it kind of, I would say we were driven in a way by, I think, my interest in doing a lot more with data, and then also realizing that retail was not the consumer of that information.
Interesting. So when you're saying we have other business partners, how many of you are there?
How many people are, I think the tie is about 80 people, maybe at this point, 70, 80 people. Um, Between, full-time, we have some contractors and stuff like that, but around that amount. I started the company, it was just me. My co-founder joined me about 9 months later. And then we have a couple other co-founders that are more advisors of the company as well.
That's impressive. And you already raised a Series A. Where's there Series B?
We've raised one round of capital. So we bootstrapped the company. We had pretty much no money to start the company. I mean, the company got started with about $100,000. That was it. Money from day trading and things like that. We got, it took about 4 years, but got from $100,000 to, about 3.5 million in ARR. And when we were at that point, it no longer made sense to raise a seed round. So we raised, what we called at the time a Series A. We raised 9 million from actually 43 investors. So we don't have any like proper VCs on the cap table. It's like a lot of angels and strategics and things like that. And that's it. And hopefully not raising again. Having come from this background of bootstrapping the company, and like we had no money, like no money. Like I paid myself $0 for 3 years. And then, 1 month I was able to finally pay myself $4,000. And that was like a life-changing amount of money for me to pay myself every single month, right? And so we really came from this born of this ethos of like, hey, gun to your head, back against the wall. How do you build a business with not that many resources? And we've continued to maintain that ethos, through raising. And, the thing about raising too much capital, obviously it's great to announce that you raised $100 million. The problem is when you go out and sell the business, you got to pay that $100 million back to those investors first before you get anything yourself. And on top of that, your employees aren't making any money as well. So for us, what's amazing is, we've only sold less than 9% of the company to 9%, whatever it is, to the company to investors. And so that means any amount of money above that, obviously, we hope and expect to sell for a lot more money than that. But all of our employees and all of our shareholders are able to generate a return. And so, my view has always been sometimes it's better to raise less than to raise more. And when you operate with a gun at your head, you have to be profitable and you have to be capital efficient.
But when you're saying like you only raised 9 million, like, let's say like eventually you will have to kind of, you have to have a particular exit strategy. So are you looking to do like, to sell the company or to go to IPO? What is your end goal here?
Yeah, I mean, look, I think everyone wants to have an exit at some point. I think the great thing is we're building a business that I think is going to be able to generate dividends, relatively soon, which is amazing. So we can be generating returns to investors and to ourselves without needing to have a full liquidity event. I mean, the challenge in crypto, and by the way, that doesn't mean I'm not interested in having an exit, right? I mean, I think every founder is interested in having an exit, but I think you got to get creative. I mean, the challenge that exists in the space is right now there's not a lot of firms that have resources to buy a company like ours or other companies, right? That have material revenue. We generate EBITDA. There's not that many companies that are able to afford and buy a business like that. I mean, you look at a lot of companies in crypto. Yeah, X company raised at an $8 billion valuation, but they might only be sitting on $50 million or $75 million in cash. And even if you said that was enough money, they're not willing to part with all that money, right? And so you end up getting equity in somebody else's business. And so what we need in order for businesses to sell in this space are more companies to go public. Obviously, Circle just filed for their IPO. Bullish will soon, I believe, be filing for their IPO. Galaxy will be uplisting, from the TSX to the Nasdaq. Next year, Kraken is going to file for IPO, and so you'll start to see more of those public offerings. Once you have that, I think it's going to be a lot easier for the M&A cycle in crypto to really kick in. But until then, if I'm running a business that's generating cash flow, I'm not looking to trade that business for somebody else's equity that's not cash flowing.
Yeah, that makes total sense. But let me ask you differently. How would the dividend distribution work? Like, let's imagine I'm an angel investor. I invested 100K with you, right? So
Mhm.
million, whatever you think is right as an example, right? So explain me when I'm going to start having dividends and when I'm going to like see my money back.
Yeah, I mean that's TBD, and that's an internal dialogue and discussion. But yes, I mean theoretically, if you dividend out X number of millions of dollars, it will go proportional to shareholders, right? So, um,
Got it.
but that's a separate dialogue.
Separate. So, but it's impressive that you basically are willing to kind of make sure that your investors are taken care of and like they're growing with you and you know, they're
I
ready.
mean, but more obviously, we want to take care of our investors, but my employees matter to me the most, and making sure that my employees have an outcome, right? And we're focused on making sure that our employees can actually get options at a low price that's well below what the company's worth, where when they're executing those options, they're confident that they're going to be able to get a return on that. So, it's really important. Look, if somebody's put in 4 or 5 years of their life working with us and working towards this goal, building this business out and getting us to a point where we're able to generate cash flow, we're growing, our revenue's growing, our EBITDA is growing, employees should be able to share in that as well. I think one of the challenges that exists in crypto is so many of these companies that raise that gigantic valuations, employees are issued, options or RSUs at these very large valuations. And yeah, maybe they got $1 million on paper worth of options, but they're executing the options at the value of what the options are. So they're not seeing any return from that, right? And so I think it's important to me, and this is also partially why I haven't raised at a higher valuation, is I want to make sure that my employees are also able to get options at a low price point. They're able to generate a return, and they're able to participate in the upside. And because at the end of the day, people in crypto jump from job to job all the time, right? And so making sure you have a company where people feel if they stay there, they vest and they continue to get options, they're able to participate in that upside with you is very important to me.
I mean, it's impressive that you run a profitable company with 80 plus employees who are like you're valuing them. Like, so maybe for someone who is still trying to structure this model, right? You can help to understand like, how to distribute evenly among employees, like, what valuation, how to make sure that, there's like, there's also vesting properly done so that everyone is satisfied.
Yeah, I mean that's a difficult question. It depends on where you're at too, right? Obviously, the earlier somebody joins a company, the more options that they're going to get naturally because they're taking more risk, right? If you join the company as the fourth employee, you're taking a lot more risk than somebody who joins the company when it's already growing and it's generating revenue and things like that, right? And so it's a difficult question. I think it also you have to benchmark to where you're at, like, benchmark, at this point, even though we haven't raised a Series B, I'd benchmark us, we're at a Series B revenue number, right? I'd benchmark us against other Series B revenue generating companies between X and Y valuation that are located in New York for specific types of roles, right? There's tools where you can use to kind of benchmark those things. I
Mhm.
think the standard, vesting that you do for employees is, 4-year vest, 1-year cliff. I mean, that's kind of the standard.
So what happens if an employee like leaves the company 2 years before the vesting is over?
That you vest into however long you've been there for. So you invest into a couple of years of your options.
Got it. I think it's important for people to understand that. So, like that, on the one hand, you have this flexibility and you have this amazing opportunity, but also compensates the loyalty, right? So, Let's jump into, I would say, more of questions that pertain specifically to the tie, right? So describe us a little bit the profile of your clients. So we mentioned that it's mostly institutions who are buying, the data points. Like first of all, why do they prefer you as opposed to your competitors? Why you're better than anyone else? And as I understand, it's a subscription model, right?
Yeah. So, I mean, our core customers, we do a lot, and we have three different really areas that we operate. But our core product is the TIE terminal, which is an all-in-one platform for data and information. We have market data, derivatives data, sentiment data, blockchain data, news, research, private company, NFT, governance, data, all in a single unified interface. And we serve hundreds of hedge funds, asset managers, banks, OTC desks, market makers, prime brokers, VCs, and other institutional market participants. Um, the reason that people will choose us is we are just the most comprehensive platform in the market, bar none. We're there are a lot of platforms in crypto that kind of toe the line between retail and institutional, right? There are a lot of platforms that you can go out and you can subscribe to that have a retail tier, an institutional tier. We don't have a retail tier. We're purely B2B. And because of that, I think we just go into a lot more depth than anyone else does, right? The negative feedback that we'll ever get on the platform is I'm overwhelmed. It does too much. I can't find stuff. It doesn't do enough, right? And so we're really working for folks that are trying to consolidate their entire workflow into a single screen. And I would say the majority of my customers are using us to trade. So unlike other platforms that are very venture focused and they're focused on much longer term trends, we certainly do have that. But I would say the majority of our customers are, hey, I want to find something that is a trade idea that I can execute on right now. Or maybe I'm an OTC desk and my customer is asking me, why is the price of this asset moving? I want to be able to give them an answer to that question very quickly. Or, hey, what do you think about this? Or what do you think about that? And so, it's really the benefit of what we have is we have everything in a single platform. And if you're looking to subscribe to one solution that, by the way, is we're very team oriented. So for us, it's our goal isn't to get into an organization and have 2 users. It's to get into an organization and have, our favorite accounts have 30 users, have 40 users, have 20 users, right? And so it's how do we get in and create a workflow that can be unified across your company and make sure that your employees are more efficient as well, right? We want to create efficiencies by aggregating everything you want to see into a single screen. And I think what speaks to that the best is that, our average client spends over 3 hours a day on our platform. So it's not just a tool that they're using, it's the primary way that they're consuming information in the space.
So describe us a little bit of the different trading strategies that the institutions are using, leveraging your data sets.
So for lack of better words, think of it like a Bloomberg or FactSet type platform, right? If you ask Bloomberg, what do your customers do? They'd ask you what customers, and within that customers, what type of person. We service such a wide range of use cases that it's very difficult to answer that question, right? So we have hedge funds that use us that could be event-driven hedge funds, and if they're event-driven, maybe the stuff that they're looking for is real-time news alerts. Maybe they're looking for, some sort of, court cases or regulatory filings that could impact the market. Maybe they're looking for upcoming unlocks. Maybe they're looking for when there's a huge spike in trading volume versus average, or when there's a big spike in Twitter conversation or on-chain activity around a wallet. We have a lot of clients that are purely systematic. And so maybe they consume our APIs and they're building that data into factor models that they're using to trade systematically. Or if they're systematic, maybe they're using our front end to identify when exchanges have outages or networks go down or things that can be risks to the strategies that they're actively running. I mean, it could be a hedge fund that's more of a liquid venture fund, and maybe they want to use more of our developer data or more of our long-term oriented on-chain data to get an understanding of, okay, which ecosystems are developers joining, which ecosystems are developers churning from. So are developers leaving chain one and now going to chain two? Maybe they want to get an understanding of flows on chain. So maybe they want to get an understanding of, okay, stablecoin flows have left chain one, but now we're seeing a big spike in stablecoins on chain two. And maybe that might prop up the DeFi ecosystem with that chain. And so it's such a wide range of use cases that it's hard to kind of, we work with VC funds that want to look at, we track every fundraising crypto. They want to look at what is the average deal size for a Series A DeFi deal right now, and they want to use that as a benchmark when they're going to go look at doing a deal with somebody else. So I'm happy to give more examples, but the long answer is it depends. Or the short answer that is it depends.
I love it. It's a very data-centric, politically correct answer. Right? So let me ask you differently before we go to the data accuracy and different examples. Like, let's imagine someone is watching this interview for the first time and they're interested in your product naturally. They're doing prop trading or some other elements, and they have other options. Let's speak. I will
Mhm.
ask you very controversial yet concrete question. Let's say they have Messari, Delphi, many other platforms that also analytical platforms. Where do you stand in comparison to other data platforms?
Yeah, well, first, I have nothing but respect for those platforms. They're very qualitative. We're very quantitative. Like Delphi is a research platform. And by the way, we would recommend our clients subscribe to Delphi Research. Like we like those guys, we're very close to them, but we don't write research. And the same thing with Messari. A lot of the value of Messari's platform is research. And I'm not going to compare every single feature. They also have a lot of data, and not saying they have a good or bad platform, but we're very quantitative focused. And we're just a lot more comprehensive than anything else in the market. I mean, the platform sells itself. If you get a demo and you see the platform, the reaction is, holy shit, how did I not know this existed? It does so much. I mean, it's about scope and breadth of depth. I mean, we have everything on our platform. We have macro data. So if you want to see CPI data, if you want to see interest rate data, we have equity data. If you want to look at MicroStrategy earnings data on the platform, you can do that. We track every single private company fundraise in this space. We have data on every fund. We can show you how much capital each fund in crypto has raised. So on fund day, how much capital they raise in their venture fund, their hedge fund, where have they deployed capital to? We have dashboards on stable coins. We have network specific dashboards. I mean, it's scope, right? You can set alerts on anything. You can say, I want to get alerted when OI on a token rate is raised by this amount and funding rates are above this and its market cap's above that, right? And so it comes down to, a lot of those platforms are great if you're looking for research or more of, in some cases, a more basic use case. If you're really looking to go in depth and get very sophisticated on the market, that's when we really come into play. So I think part of it is also just a level of sophistication.
So let's imagine someone comes, for the first time and they don't have a specific data set there. They know they want to learn more, or like again, they're doing purely trading, right?
Mm-hmm.
So what automation tools would you allow them to use to make sure that they're not lost in thousands of different parameters, right? And they're like, getting the
Yeah,
benefits.
I mean, I think that the challenge is making sure you onboard them on a little bit to start, right? I mean, again, to take the use case of somebody who uses like FactSet as an example,
Mhm.
you might only know how to use 5% of the platform. No user knows how to use 100% of our platform. They just don't. We do so much, it's not possible. And so our goal is we focus on what is it that you do? What is your job? And even within a hedge fund, are you a CIO? Are you a PM? Are you an analyst? Are you a trader? Because depending on your answer to that question, that's going to impact what we show you. So what I want to understand is, what is your strategy? Are you long only? Are you long short? Are you trading spots? Are you trading derivatives? Are you hedging? How often are you rebalancing? What's helping you make trade decisions? And so what I want to understand when I get on the phone with a client is, what exactly is it that you're doing? What is your workflow? And then what we'll focus on doing is, hey, how do we tailor what we're showing to you as a user, and focus on, hey, on your first session with us, I want to show you 3 or 4 things and make you an expert at those 3 or 4 things. And then over time, let's add more and more features. It's not like, hey, let me just dump this whole thing on you and good luck. And which is why we also have, unlike, some other platforms, probably, we have dedicated customer support. Like every single person has an account manager that they can work with. And also, one unique thing about our platform to mention too is our platform is also very conducive to more technical users. In other words, we expose all of our data in SQL. And so anyone who wants to, we also map the APIs of every other data provider in crypto and Python. So on our platform, if you want to use all of our data in SQL, but maybe you want to bring in Messari's data or Nansen's data or anybody else's data, if you have an API key from one of those data providers, you could go and you could bring that and connect that to our platform. We also have technical support that can help you with integrating all that data as well.
Amazing. So how do you leverage AI? Because I know that you have some elements that automate like a lot of things, like, and there's a lot of opportunities for, neural networks to kind of make it even more efficient, right? And be ahead of the curve. So maybe you can elaborate on this part as well.
Yeah, I mean, we use AI in a ton of ways. So, I mean, we've always used AI in different ways, since, it was in more of its infancy than now. Um, we use AIs in everything from summarization of information. So, hey, give me a summary of what's going on right now. What are the top news stories that are moving the market? Give me a summary to, we actually allow people, imagine you have a dashboard of data, right? And it's totally customizable. And historically, what we've allowed our users to do is choose from about 300 things. So if you want to choose some components that are derivatives focused, if you want to choose mining, if you want to look at hash rate components, if you want to look at Ethereum staking components, if you want to look at news, you could do that. But now we actually rolled out this thing called the AI Widget Studio, where basically that has access to all of our raw data. Our clients can actually come in, they can type a sentence in English. So, for example, chart the returns of, or chart the correlation between Bitcoin and the SPY over the last 5 years, chart the rolling 30-day correlation, and overlay Bitcoin's price. You can write a sentence in English now. Our tech will automatically write a Python script for you, run it, and then create something that updates in real time on your dashboard. And what's cool is if you're a technical user, you can actually go in and you can edit that script. So that's the one way. And another way, we also, because we have so much news, so we've been tracking news from about 7,000 sources. And when I say sources, I don't just mean publications, I mean court cases, regulatory rulings in hundreds of jurisdictions, SEC filings, blog posts from tokens, blog posts from exchanges. We've indexed all of that data. And you can ask questions that, well, we have like a chat where you can basically ask against all of that index data, which is incredibly cool. And it will cite and source all of that data. And it's cool because it can give you both a quantitative and qualitative answer. So if you ask a quantitative question, it can give you an answer using some of our raw data, like the actual data itself, but it can also give you an answer out of news too. And so you can get kind of two looks at something, which is quite cool as well. So we continue to evolve, using data. But I think, the biggest thing for us is we do too much. We know we do too much. We know our platform is overwhelming. And so a huge focus of mine is how do we take AI and leverage AI? Because we've built more data than anybody else. Like hands down, we just have more shit, and that's overwhelming. And so how do we take AI and simplify? And that's really where that's really the focus.
I love how unfiltered you are. Like, that I really appreciate it. So, like, actually, this is an interesting question. Like, so I'm sure because you build a lot and you customize, it's kind of a modular system, right? So there's a lot of redundancy in a way, like, right? Because some of the clients that, like, let's say two clients that you optimize the system for them, let's imagine they're no longer a client and this particular module is not relevant for anyone else but them, right? So how do you make sure you're always like stay cost efficient and also like reasonable in deploying your resources and yet profitable?
Yeah, I mean, I think the thing to get to consider is what we've found is everyone tells you they want to customize. No one wants to customize. So you think everyone wants a custom version, and this is a trap that you can fall into. Anyone who's listening, this is free money because you're not going to fall into the trap now, hopefully. Um, you can overbuild and you can build too much and you can build too much customization. And sometimes you shouldn't be listening to those 20 customers that have the greatest of needs. And so what we found actually is the things that are most used are when we're actually building defaults for all of our customers. So, we will do calls every month where we go in and we talk to, our sales team and our folks that are connecting with customers. We'll get feedback and, what I want to hear is I want to hear 15 customers ask for something. 20 customers ask for something, 30 customers. And I want to hear it month over month. And that's how we're making decisions, right? We're no longer, I mean, we're at a scale now. We have hundreds of customers. We're not just going to take this one person ask for something and do it, which is a trap that you can fall into as a small company. And by the way, I've fallen into that trap. I can't even count how many times. But what we're focused, and by the way, sometimes you do want to listen to that customer because sometimes their ideas are really good and the people that aren't asking for it might benefit from it. But more often than not, if it's very custom and it's for a specific person, you might not want to build that thing. With that said, we do custom work for our clients if we need to. But yeah, I mean, what we're focused on doing is understanding what is the root of what the customer is asking for. So a lot of times customers will ask you for things, but they don't know why they're asking you for things. What we want to unravel as a company is what is underlying this ask. And also in crypto, what do we think has staying power? For example, we built a ton of NFT data. We put, I don't know, say $1 million in developing NFT data, 500,000, whatever the number is, we haven't even seen a tenth of that in financial return, right? And so I think one of the challenges that you have to think about from a crypto perspective is this market moves so fast. And what people cared about 3 weeks ago is not what they care about today. I mean, just think from a narrative perspective, meme coins were the hottest thing. We built some meme coin stuff. Now no one really cares about it, right? And so, it's kind of like this challenge of you want to catch the wave because you want to sign those clients, but at the same time, you don't want to start building something that's going to take a huge investment, is going to take a mega amount of time. And then by the time you launch it, everyone's past it, or, people are going to stop caring about it 3 months later.
Yeah, no, I totally understand. That's a very smart way to do it. So now, if I may ask, if I don't know if it's an open information, like what are the pricing? What is the minimum package that like any partner, like any client that is looking right now?
If you send us a message, we're happy to talk pricing, but it's our pricing is very reasonable. It's materially less than traditional financial market alternatives for what we offer, and it's in line with others in the industry.
Let me ask you, do you know what is the pricing of Bloomberg Terminal?
Yeah, Bloomberg's about $26,000 a year a user.
Okay, so you're saying
28. We
so
are a fraction of that.
a
Yes.
fraction of that. So that makes sense. Got it. So that at least gives the people a range. It's a five-digit number, roughly, I assume, right? But it's very reasonable as comparing to traditional counterparts. And the beauty.
Correct. I mean, one thing you have to keep in mind in this space is the average fund in crypto doesn't have that much money, right? In equity markets, no one would launch a fund with less than $200 million. That's kind of the recommended number because you have a lot of cost. You have to hire a team, you have to buy technology, you have to get a custodian, you have to hire tools. In crypto, a lot of people will launch a fund with, let's say, 10 million in AUM. And when you launch a fund with 10 million in AUM, funds generally charge a 220 model. They take a 2% management fee and a 20% performance fee. A 2% management fee on $10 million is $200,000 a year. That's your budget to spend. And you have to pay yourself. And what if you want to hire an analyst and your custodian and your fund admin and your lawyer? And so a lot of funds start having to go out of pocket to pay for cost, right? And so the challenge that exists in crypto, and the reason, by the way, you haven't seen a lot of data companies raise at giant valuations recently, is a lot of them have struggled to scale because the customers aren't there to enable them to scale. Because you can't. I'm not in business to sell somebody 2 seats. Like, look, we love all of our customers that have 2 seats, and we like onboarding them, and we want to have all of them. But we want them to grow so they can buy 30 seats from us. I'm not making money on 2 seats, right? I make money as you scale, and I scale with you. And so, yeah. So, I mean, the point being there is, this industry, you have to be competitive on price because the alternative is people just don't have money and they're going to piece together 50 different free solutions. So, oftentimes if we're going to lose a user, sometimes it has nothing to do with our platform and it just has to do with budget, right? And just the fact that there's just not enough money to go around.
So, considering you look at a lot of data, like naturally given your core focus, right? What are the trends that you see that people are not focusing on, right? What are the biggest, like, let's say, maybe like how much money are flowing from one particular institution to another, or what are the other biggest impact on the industry? Maybe some other things that are very interesting.
From a data perspective, I think that's a hard question. I think a lot of the data doesn't look particularly great these days. From a price perspective, at least. I think with a lot of data in crypto, it's all about peeling back the onion and digging in a little bit deeper, right? And so, okay, there's a lot of transactions on a network. What are they? Were they incentivized transactions or were they non-incentivized transactions, right? Like understanding, okay, there's a lot of developers moving to a new chain. We've done a lot of research. We found a lot of times that's a single that's like, those are developers that have made one commit. Are they full-time developers that are working on the project, right? And so I think as you think about data, and this is the challenge, right, is we want to equip our users with so much information, but it requires peeling back onions further and further and further to get closer to the truth. And so, in terms of the truth in reality, I mean, I think right now you're seeing funds are struggling to raise capital. You're seeing it on the liquid fund side. So one of the things that we track how much capital funds raise, both VC funds and liquid funds, in the US specifically. And capital raising is down. And so sentiment, I think, is broadly not that positive. But on the other hand, if you speak to these large TradFi institutions, it is a very different world, right? You see these ETF issuers that are, I mean, Fidelity just filed for a Solana ETF. I do not think that's the end of it for not just them, but for others. I think you're going to see a world where there's multi-asset ETFs that are going live. I think you're going to start to see some venture funds raise more money again. I think that's going to start to pick up a little bit. But I think one of the most important things is liquid needs to pick up. We need to see bid on liquid tokens. I mean, I think one of the big problems is you had all these big TGEs and, a lot of them have flopped, like the Gunzilla TGE. I mean, it was down 45% on day one of trading. That's not great. And Gunzilla is doing hundreds of millions of transactions since it launched, right? There are real users, it's got real traction, it's an actual game, Ninja was playing this thing, right? Like there are real people using this thing, and the token goes like that. But that also has to do with the fact that I think people are now taking token economics a lot seriously. They're looking at value accrual mechanisms, whether or not these tokens should actually make sense. And so I think, broadly to answer your question, I think the data I'm looking at is fund flows. How much capital is flowing into the space, I think is very important. Are liquid funds able to raise money? We need liquid funds to raise money in order to bid some of these new tokens coming to market. And then I think, looking at where the bid's coming from, where they're going. But I think, the thing that will really make a huge difference, I think people are very much underappreciating how much TradFi and regulatory clarity coming into the space is going to move the needle. Because once large financial institutions can start offering real products, once BNY Mellon can custody my crypto rather than a crypto native custodian, once I can trade spot crypto with Deutsche Bank or whoever else it is, right? That is going to open the door for a lot more folks to come in, because what has historically kept a lot of traditional hedge funds from coming in is nervousness. I mean, there's a lot of reasons, one being liquidity being an issue and things like that, but a huge part is nervousness around counterparty risk. But if your counterparty is the same financial institution that you were dealing with already, I think that's going to get people more involved.
BNY Mellon is already custodying at least Bitcoin, right?
BNY Mellon, I think you'd have to see what the latest information is. And I don't have any insider information. What I do know is that previously they had built their product, but SAB 121, which is SEC Staff Accounting Bulletin 121, basically prevented publicly traded companies from custodying crypto because you had to hold an equal amount of US dollars on your balance sheet as collateral, which made it prohibitively expensive. So if you wanted to custody $5 billion worth of Bitcoin, you needed to hold $5 billion US dollars that wasn't in a money market fund earning interest. The opportunity cost of that was 5% on your balance sheet. So they hadn't fully rolled out their custody offering. That might have changed. And I think that will change for a lot of these large custodians. And you're starting to see a lot of them coming back into the space. Like I think Standard Chartered has announced, State Street has started hiring their crypto team out again. They had let go of their crypto team. So I think, this is not, the institutions are coming is never a it just happens thing. It's always it takes time thing. But I mean, the conversations that we're having are in terms of like who's in this space are ridiculous. I mean, banks are more bullish about crypto than crypto Twitter is right now. Like it's this ridiculous dichotomy.
But this is also in a way dangerous, right? Because if you like, our industry is relatively small if you compare to other asset classes. Like $3 trillion in comparison to like other like asset classes is nothing,
We're the
right?
size of Apple.
Exactly. So if you think about it right now, if big institutions like BlackRock, State Street, Fidelity already in, like BNY Mellon and others, so we're gonna have a situation where they can quickly monopolize a lot of those operations, right? So a lot of the people like who are like hardcore degens and decentralization fanatics, right? They're saying, okay, well, this is not good thing, right? It's actually dangerous. Now, I know that you are more of a like centrist person, myself as well, right? So let's talk about like, what are the risks of bigger institutions coming in and actually, okay, they will introduce the trading spot and derivatives, like, but at the same time, that means they will eat the majority of liquidity, right?
It can. I mean, look, there's already a few TradFi prop trading firms that are, I mean, I'm not to name names, but there's a group of them that account for more than 50% of the daily volume on Binance and Coinbase and other exchanges already and have for years, right? And so the Chicago prop trading firms have already been here. I think if you're a fund, the market's about to get a hell of a lot more competitive and a hell of a lot more sophisticated. And so, you need to figure out what your edge is, but keep in mind your edge could be on lower, like smaller altcoins and not larger tokens, right? Because I mean, the challenge is, a large fund comes in, you can't put $2 billion to work in alts. You can't. I mean, there's not liquidity to do it, right? And so, I think on the smaller scale, crypto funds can still win. And also keep in mind, the large traditional institutions are not going to go list 750 tokens tomorrow. That's just not going to happen, right? And so I think it's going to be a boon to a lot of the larger cap tokens, and maybe less so to the smaller caps. But I think, look, they're going to acquire crypto native businesses. I think you need to get to a point where crypto companies raised at ridiculous multiples of revenue. I mean, I know countless companies that raised at 70 times, 100 times, 150 times revenue in 2022. The perception of what multiple you're going to trade for has to come back down to earth. And so I think that's going to happen. There's a reckoning that's happening to a lot of companies that are going out that raised giant numbers in 2022 that are trying to raise again. I think a lot of those firms will go and sell to traditional companies. I mean, you're going to see it with the Circle IPO. I mean, Circle did 1.7 or whatever the number was billion in revenue. Obviously, they gave half of it to Coinbase, but they're IPOing at a $5 billion valuation. 22, if they raised with that number, I mean, who knows what valuation they would have gotten in private markets, right? And so I think things converge to public market numbers, and when they do, I think private Web2 businesses start acquiring more Web3 businesses as well.
Interesting. So what do you think is separating us from the success so that the new trillions we're going to flow it into crypto, and when do you think it's going to happen?
Well, sorry, what was the question?
When do you think is like trillions of dollars are actually going to get in like the new liquidity from traditional finance? Do you think during this administration it will happen?
If I knew that answer, I'd be incredibly rich. Uh,
Your
so
hypothesis. Of course, we're just
yeah, yeah. And nothing I say is an investment or business advice for that matter. Yeah, it's a hard question. I mean, I think we've seen already hundreds of billions of dollars flow in through the ETFs. I think as more of those products go live, that's going to be great. I think you're going to see a lot more tokenization start taking place on chain. I think there's a lot of nonsense, but I think there's substance there as well. But it's going to take time, right? It takes education. It takes it's very easy to go into a financial advisor's office and explain to them the benefits of Bitcoin. It's digital gold, right? Like it's a store of value. There's a limited supply of it. Maybe ETH at some point was easier to explain, but imagine now walking into a financial advisor's office and explaining them the value of accrual mechanisms of optimism and arbitrum and how that compares to ETH and where the value should flow to, and should you buy that for your clients. And so I think there's just, and that's not to say that obviously there's value in those products. It's not to say there's not value. It's just a more difficult thing to explain to somebody who doesn't understand crypto, right? And so I think it's going to take time, take education. And I also think, and I've been pitching this for a while, having multi-asset ETFs is the most important thing, because now you can go pitch somebody, hey, you want exposure to crypto? Buy the Bitcoin ETF, maybe the ETH ETF, and then buy this basket of these top 25 assets, and that's your exposure to crypto. And that's going to create a shit ton of bid on smaller altcoins.
interesting. Don't you think
That those products will go live this year, by the way. I'm pretty confident in that.
what I'm talking to a lot, some other friends who are like big in traditional finance, they're actually in consensus, which I also think it's going to be huge, is that RWAs is going to be the main driver, that they soon going to outperform like all DeFi combined, etc. Right? So, what are your thoughts on this?
I mean, I think RWAs are just security tokens rebranded. We've had security tokens since 2017, right? There have been companies that have been in this space for a while. The question is, what do we mean by RWAs? What are the products that are actually tokenizing? Is there a demand to tokenize that product? Does it even make sense to do it? If you look at a lot of what exists in crypto today, a lot of the RWAs that have market cap behind them are incentives that are given by foundations to drive up that market cap. There's a product in the market that has a few hundred million in market cap behind it. I know the single foundation that's behind all of that money, and they're doing it to say that they have more TVL on their chain, there's more products on their chain, things like that. So the question is, what are the products that are actually going to drive demand? What are the problems what are the problems that uniquely tokenization can solve? I'm not the absolute expert at that, but my opinion is that, a lot of that innovation and the things that are going to take traction are going to come from traditional, financial institutions that
Yeah.
have the customers that have the distribution.
No, that makes sense. I agree with you in a way. Like I think that that has to happen anyway because that's the biggest liquidity. We cannot ignore that. But I do believe that tokenization of stocks, bonds, or any other like credits, etc., that will also bring huge, demand. And you're in Texas, by the way, right? So what are your thoughts on the new exchange, like that has been established?
I'm not an expert at the new Texas Stock Exchange. I need to talk to one of my friends who just joined and get like the whole pitch. I haven't gotten the pitch yet. I read the news announcement about it, and that's it. So I have no expert opinions.
Well, here's my thoughts. I believe that eventually what because given the big boys behind it, like, so BlackRock and others, like, I think they will try to make it like as big as New York Stock Exchange. I mean, over time, of course, right? And given the fact that it's going to be 24/7, I have a pretty bullish thought on this. Again, to make it short, like plus Texas as a state, I think is very favorable, like in terms of, tax regime. So that's another reason why I think it can win over New York as a state, just because of that, right? So combined with blockchain technology and this narratives, I think they will try to make it relatively big, right? Whether they're going to succeed, that's a different story, right? So curious to see what's going to happen there. Any other like maybe news that most of the people are not focusing on, right? That you think they're going to be pivotal, like maybe Stablecoin Act or any other things.
Yeah, I mean, I think that all of the regulation is I mean, the Stablecoin Act and other things that are, being worked on in the Senate and the House are more bullish than I think the market is pricing in. And I think it just depends on how fast, the market starts moving. I mean, I think, there's now a little bit of growing concern that, Trump has swung a little too far on a lot of issues, and he might get, rinsed in the midterms. Um, and so I think, it comes down to how fast we can get legislation passed. I mean, something that I've always said was a risk about, associating Trump with crypto is the fact that, a lot of times, I mean, the US is so partisan, which is the most ridiculous thing, that if Trump is the crypto guy, the Democrats naturally might try to be the anti-crypto person. And so that's a risk that we've run in the industry. I think what we need to focus on is how do we get bipartisan support behind this and make sure it's not just, Trump, Trump, Trump mania, crypto grifting. And there's real substantive stuff being happening. But I think that's important. But I think, yeah, I mean, I think one thing that's just being underappreciated is just all the announcements that are coming out of large TradFi institutions that, hey, we're considering crypto custody. Hey, we're considering using USDC for settlement. We're considering launching ETFs, these different products. I mean, it's funny. These are things that 2 years ago would have moved the market 20% each. The market doesn't even blink anymore. And I think, in aggregate, as some of this stuff starts to come to market and starts to snowball, you're going to see that snowball effect.
Yeah, but to be fair, like, I think one of the reasons probably is because of the challenging macroeconomic situation, right? Because of the
Correct.
tariffs
Correct.
and the global war, that's why we don't see them. Because normally, if the market would stay like relatively just neutral, I'm sure we would see incredible interest in what's happening and powered by those regulations. But because we're having this war, basically like economical war with rest of the world, yeah, that creates a lot of challenges, like, because everything, like the bigger markets are correlated with crypto directly, whether we want it or not, right? So,
I agree with you. I agree with you 100%.
but by the way, I actually think that Democrats, like, I'm following like Anthony Scaramucci is our good friend, like, he was a big critic of Trump, and then he actually was helping the Democrats to with some crypto agendas, like, standard. I see a lot of smart people joining them because what they understood, that one of the lessons that crypto is incredibly powerful. If you think about it, what brought Trump to power? A lot of huge crypto conglomerates also, right? Because they were suffering from SEC, right? And that was one of the reasons, like, so I think they've learned that to be anti-crypto is definitely not beneficial for anyone. So it was the second biggest donor to both parties, by the way, as an industry. After, I think after oil and gas, if I'm not mistaken, right? This crypto was the
Wasn't
second,
SBF? SBF was like Biden's biggest donor, or second biggest donor, and
which is we're not proud of it, but but
we have nothing to do with him. We have
yeah.
nothing to do.
So that is true, right? That is true. But like other legitimate companies, both what Circle, like the Coinbase, different foundations also like contributed a lot. So I think now both parties take a very serious consideration, right? As to fight for a crypto user, right? Which is great. And I think it's gonna get even bigger.
Yep.
Let me ask you, like, this is more of a, to sum up, like, more of a, like, your advice to the founders. You build a
Oh God,
product.
don't listen to me.
No. It's impressive so far what you've shared. I think a lot of people who will hear it for the first time will impress. I mean, listen, you're young, you're successful, you've built your like first big business, and look at it, like it's already successful. You're employing 80 people, you're helping others. I know you participate in charities, like even though you don't brag about it, I can talk about it on my behalf. My question to you, what would be the top three pragmatic advices to build a profitable B2B business?
Um, it's a really hard question. Don't put don't pour fuel on the fire until you're absolutely sure you're ready to pour fuel on the fire. Just because you had some early success doesn't mean something is necessarily scalable. You got to prove something is scalable. And we found that, before, a lot of companies in crypto overhired on sales, as an example, right? And, they thought, okay, I sold 50 things in the last 3 months. If I just tripled my number of salespeople, I would sell 150. Turns out you got to understand how big the pond you're fishing in is, because the crypto pond is growing, but it hasn't grown that much, and so you got to understand how many fishing rods you should actually throw out. And so, obviously, if you're non-crypto, you have to understand your market as well. But I think really understand what is your customer, what is your TAM of the product that you're selling before you start trying to pour fuel on the fire. And they're big. I mean, there's Series E crypto companies that have grown like that, and now they're that because they hit that ceiling of TAM. And so I think you got to be very careful, from that regard.
Target
Two other,
addressable markets. Okay. Second.
I've found that one of the best things I've been able to do is ask people mistakes that they've made, and ask people, like what have they done that hasn't worked. I think especially as a smaller company that's trying to bootstrap, or even as a larger company,
Hmm.
it's very easy to lose money and to waste money. And when you don't have that much money, you have to be very efficient with your spend and with everything that you're doing, and you have to be very cognizant of everything that's going on. And so I think, being aware being willing to ask, hey, do you think I should do this? And if why hasn't it worked for you? I've actually found that getting negative advice is better than getting positive advice. Because negative advice, you can avoid potholes and mistakes. Positive advice, it might not work for you, right? It might have worked for somebody else. It might not work for you. By the way, this is positive advice that maybe wouldn't work for you either. So maybe take my negative advice more. And then a third thing, build MVPs. Like really, really build MVPs. An MVP doesn't mean it barely works. It means it's minimally viable to actually sell the product. But build MVPs and get feedback. Just get something out there in the market and let people react to it. Because chances are, the first product you build is not the product you're going to sell. What we started doing, I mean, we only talked about part of the business that we have today as a company, right? I mean, we have 6 or 7 different business lines, and we make money across all of them. But what you think you're going to do starting out as a company is not what you're going to end up doing. And that doesn't mean that it's not going to end up being the type of offering. It's just going to be different than you think it's going to be. So don't be afraid to ship MVPs and just get a shit ton of feedback. And also don't be afraid to like give people access early for not that much money, just to start hearing from them.
So having listened to this part, like now I'm curious, what is your biggest mistake so far?
I don't like to dwell on mistakes.
But you just said like
So
this is the most valuable part that you can share.
no, that's true. I mean, biggest mistakes.
One, name
I
us
mean,
one.
I think a big mistake that we've fallen into time and time again, which I mentioned earlier, you get feedback from two users. You think the idea is really cool. You get super excited about it. You spend 2 months building it, and then no one buys it. Um, and so make sure you have multiple opinions before doing something is something that I've learned, a lot of times. I think that's part of it. Um, I think another thing is don't chase the exit always. I think one of the traps that you find yourself in when you're VC backed is you need to build this perfect mold for VCs that's B2B, ARR focused on, CAC divided by LTV, focused on NRR, GRR, all these different metrics. And by the way, we track all of them every single month. But the point being is sometimes you should just make money. Make money and then figure out how to build a business that sells itself later. But don't be afraid to go out of your comfort zone to make money in more unique ways. Because
That's
for a long time, we just chase we want all of our revenue to be ARR. And how can we talk to a customer to make it look like their revenue is ARR, even if it's not ARR? And then you end up selling less. And so sometimes you just got to work with people and give them what they want and make money. And then look, I haven't had the exit, so I could be totally wrong, right? But I think if you make money and you're generating revenue and you're growing your balance sheet,
for sure.
the business is worth something.
The revenue is the king, so no doubt about it. Right. So this is just a question that I ask everyone, and I don't notify my guests that I'm going to ask this question. So I want you to kind of take it very, easily, right? At the same time, like organically, because this is a personal question, right? So, you've built successful business, and you have a beautiful family, right? So my question to you, Joshua, is like, what is the meaning of life to you?
It's a really difficult question. I mean, I think for me, the biggest thing is leaving the world a better place than you found it. And by the way, not needing to necessarily get credit for that, but just knowing that you made an impact. Like I care a lot about a number of social issues. Like personally, I'm vegan. I'm not the kind of vegan that's annoying about it. I think I've ever said that on a podcast before. Like I don't go shout that out the window. I don't care that you're not vegan. But for me, I just feel bad knowing that I've harmed animals in what I eat and what I wear and what I do, right? And so for me, the way that I want to leave the world is I don't know. To me, I find meaning out of giving to others and doing things to improve lives of others. And so, for me with the tie, it's always been about I want to make as much money as possible, not because I want a private plane or because I want this giant house. It's because the more money I have, the more impact that I can make, and I can make that impact in a lot of ways. And so I don't know if that answers your question, but what I find meaning in is I find you are much happier when you help somebody else than when you make money or something happens for yourself.
So helping others is your meaning.
Yeah, I think that's probably right.
Beautiful. No, I think it's beautiful. By the way, I never asked you now that I realize one bonus question. Like, what's with the name, the Thai?
It's a terrible name. So it's a long story. It's a terrible name. I couldn't come up with a name. Um, and my dad suggested the Trusted Information Exchange, and I was like, that's not going to work. Who's going to trust a company with a name Trusted in their name? I was like, it just doesn't sound trustworthy. So, anyways, we went to register as the Trusted Information Exchange, and I forgot what the laws. There's some securities laws against using the word exchange, and there's some other regulation against using the word trusted. So then we just somehow ended up as being the tie. I like to say we're tying informations and connections in the industry together. We brought in a CMO about 3 years ago, and when he came in, I said, "You have free reign to change the name of the company if you want to." And he's like, "Enough people already know it. Just keep it." And so, we're rolling with it. So I offered.
Well, at least now we know that this is actually an acronym which stands for Trusted Information
Well,
Exchange.
it doesn't stand for anything technically. There's no registration that says it stands for
Well,
anything.
there's a backstory, right?
There's
So,
a backstory. It's a funny backstory. It's funny to say the name is stupid. I know the name is stupid. Like
no, I don't find it stupid. I just
it's
find it
easy. It's easy to remember. So
I actually find it unconventional, and that is why it's memorable because most of the companies are very like fintech oriented, But if you look at the crypto, even
I mean,
in
it's funny. You have the block. You have Blockworks. You have Block Daemon. You have everyone's a block or a coin or a this. You have it's funny, and like people in the industry, we obviously know the difference between all these companies, but like I talk to people outside of the industry, and they're like Cointelegraph. I mean, I think CoinDesk. I mean, this like it's like our two biggest publications have coin in their name. Like,
I have ideas for your next video if you want, like, with the tie, I have perfect video reel. I'll tell you after. So
okay.
anyway, Joshua, I know we can chat for hours. Like, I really appreciate your expertise. Thank you so much for sharing it with us. Like, where can people, if somebody wants to reach out to you and experiment with your platform, what is the best place where they can reach out to you?
Yeah, you can go to thetie.io. If you want to go and play around with the platform, just reach out to our contact us form. One of our account executives will get in touch and more than happy to show you the platform and let you check it out. You can follow us on Twitter at thetie.io. You can follow me on Twitter. I don't really post anything, but I should get better at it. I'm at Joshua_Frank_. I'm usually just bitching about like the Knicks or the Jets or a sports team, but sometimes I'll throw in some crypto retweets.
Well, you're very genuine. That we totally hear. So
And I will give genuine takes, generally.
that's already like, the best role. Thank you so much, Joshua. It was really entertaining. Hope we'll do it at some point again, like, and I wish the Tide to become, this unicorn and provide the best and the most accurate data to everyone who's using you.
Thanks for having me. And if anyone listened to this whole thing and is still here, I appreciate you. And I can't believe you made it through this long.
Thank you.